currencies worldwide are a hot topic at the moment. There was a book published in 2011, November 2011. It's called Currency Wars, The Coming of the Next Global Crisis. It's by James Rickards. He's in the studio with me now. James, thanks very much for popping in.
Thank you, Lindsay.
2011, you published the book, but now currencies are even more in focus, particularly, I think, recently with the debasing of the Japanese yen by the Japanese. But lots of currency wars within currency wars are going on right as we speak.
That's exactly right. And it really comes as no surprise, Lindsay, because in my book, I looked at two prior currency wars, one from 1921 to 1936 and one from 1967 to 1987. What I learned is that these can go on for 15 or 20 years. They're not over quickly. The reason is they don't really have a logical conclusion. You know, it's tit for tat. I cheapen my currency, you cheapen your currency, and we sort of get into these beggar thy neighbor devaluations. So I would expect this currency war started in 2010, the new one. I would expect it would go on until 2020 perhaps. And it's like a real war. You know, you don't have continuous fighting all the time. You have these big battles and then quiet periods. You know, so maybe there's the Battle of the Bulge or the Battle of Stalingrad and something quiet in between. What happened in December and January with Abenomics was a major spike in the currency wars. Obviously, Japan was going in full-fledged, but I expect this would continue.
Okay, what about the long-term view, though? I mean, you talk about 2020. Ultimately, a currency it finds its own value because of trade flows and interest rate policy and that sort of thing. So these so-called currency wars are usually very short-lived, aren't they?
Well, no, I think what you're describing, currency values do fluctuate based on fundamental factors of the kind you described. So changes in comparative advantage, demographics, technology, resource discoveries. These are good reasons and normal reasons for currencies to change values. But currency wars are different. It's when a country intentionally cheapens its currency as a matter of policy for the sole purpose of stealing trade from their neighbors. And you can do this through interest rates or quantitative easing. There's a lot of academic research behind this. But the U.S. started this in 2010.
Yeah.
The U.S. effort was to cheapen the U.S. dollar as a way to get inflation in the U.S. Because everyone says, it helps exports. That's not the main reason countries do it. The reason they do it is to import inflation in the form of higher import prices and then get nominal GDP going, hopefully self-sustaining. So it's a very complicated play, but it has ripple effects all over the world.
Yeah, the ripple effects, of course, can be mitigated by buying gold, for example. I know you're a bull on gold.
Right. Absolutely. Well, the way I look at it is there's too much debt in the world, not enough growth. Countries are desperate to get some growth. They're willing to have more inflation and get nominal growth just so they can pay their debt. The problem is the way they're doing it with money printing, they risk a complete collapse of confidence in the paper money system, at which point, I don't think there's a central bank in the world that wants a gold standard, but they may have to go to a gold standard to restore confidence in a crisis.
But that's been mooted so many times, James. It's never going to happen, surely.
Well, the international monetary system has collapsed 3 times in the past 100 years, 1914, 1939, and 1971. So this would only be the 4th collapse in 100 years. So it does happen every now and then. It may not happen for 20 or 30 years. And I'm not saying we're due. It's not like clockwork, but it does happen. And when it happens, by the way, it's not the end of the world. It just means the major financial and economic powers get together, sit down, and rewrite the rules of the game. And my interest is, what are the new rules going to look like? What will the new international monetary system look like? Gold is a contender. The other one is the SDR, the special drawing right from the IMF. The IMF has a 10-year plan to make the SDR the global reserve currency. It's not a secret. It's on their website. They published a paper in January 2011 explaining it. The other thing is Russia and China are fed up with the dollar system and dollar hegemony. And you're going to be hearing a lot more about that next week at the G20 in St. Petersburg.
Don't you think the Chinese currency might be the reserve currency of the future? A lot of people are saying that.
Yeah, no, I don't think so. And the reason is it's got an expanding role as a trade currency. But a reserve currency is different. You have to have a large, deep pool of investable assets to be a reserve currency. There is no Chinese bond market to speak of right now. And it'll take them at least 10 years to get it, because you not only have to issue the bonds, you need dealers, repo, hedging, futures, options, settlement, clearance. You need a lot of things to have a bond market. I don't think the Chinese want their currency to be a global reserve currency, because they'd have to open their capital account. What the Chinese want is for the SDR to be the global reserve currency, and for China to have a larger voice, more votes, in other words, at the IMF. And this is all in play. These are initiatives that are currently in process. And when China gets those votes, and of course China's been acquiring gold, my view of that is when the system collapses and we have to sit down and kind of recut the
You say when it collapses, so you're predicting a collapse. We've got about 30 seconds left, James. Tell me the impact of that tapering might have, and also a new Fed chairman, Larry Summers, because I predict in my own sweet way that there's going to be turmoil over the next few months.
Well, it will be Larry Summers. I think we can be very confident that he's going to be the next chairman. My own view on tapering is that the Fed will not taper for two reasons. One, if you take the Fed at their word, economic results are very weak. I understand GDP was a little higher in the second quarter, but there's so many other data points that are weak, so they would be tapering into weakness. I don't think they'll do it. If they do, however, that'll be very bullish for the dollar and bearish for gold, at least short term. I'm a long-term bull on gold, no doubt about it, but tapering will cause the price of gold to go down a little bit.
Okay, James, we'll leave it there. How can we get your book, by the way?
It's available on Amazon and bookstores around the world. Thank you.
Okay, so still in circulation?
Still selling very well, thanks.
And you might have to update it, of course, with everything that's going on at the moment.
We'll actually have a new book coming out in April, so we'll be talking more about that in the months ahead.
Okay, jolly good. Thanks very much for popping in. That's James Rickards, who is the author of Currency Wars, the coming of the next global crisis. That's